Our money is actually counterfeit. This is alarming, and anyone who saves dollars is currently at a disadvantage. The reason is simple. They keep printing money wildly. When I look at the state of the world, I see widespread confusion and wonder why there is such a huge gap between the rich and the poor. Why is the real estate market in a bubble? The answer to many of these questions can be traced back some 50 years, precisely to August 15, 1971. It was in January 1972 that I was on board an aircraft carrier in the South China Sea. I missed Nixon's crucial announcement on August 15, 1971. At the time, I was a Navy pilot and received a letter from my rich dad in the regular mail, informing me that Nixon had taken the dollar off the gold standard. It took 6 months for this letter to reach me, but in any case, I didn't understand the immediate impact of this event in 1971. For those who don't know, it had been illegal for Americans to own gold since FDR removed the dollar from the gold standard in 1933, also establishing Social Security. FDR really made a big impact on the economy back then. Owning gold didn't make sense to us, and that change really altered my life. When I look at today's economy, many questions arise. For example, how is it possible that the CEO of a company can borrow money just to inflate the price of his company's shares? Imagine a world where money is like air, continuously pumped out with its value constantly decreasing. This isn't science fiction. It's the reality we've been living in since 1971. According to maverick financier Robert Kiyosaki, we're about to plunge down a rabbit hole where the rabbit could be wearing a gold Rolex. Kiyosaki argues that 1971 marks a major heist, not of jewelry or gold bars, but of something much more insidious, the very foundation of a stable financial system. This heist was masterminded by none other than President Richard Nixon and involved taking the US dollar off the gold standard. Think of the gold standard as a strict teacher. Each dollar in circulation had to be backed by a specific amount of gold, ensuring that its value remained relatively stable. However, Nixon, in a now infamous move, abandoned this rule book, ushering in the era of counterfeit money, as Kiyosaki calls it. Central banks, such as the Federal Reserve, were now free to print money seemingly at will. The result is an endless supply of money flooding the market. Imagine a baker who constantly produces fresh bread without anyone buying it. Soon, the bread will lose its value. The same principle applies to money. With more dollars chasing the same amount of goods and services, inflation takes over. Every dollar buys a little less, silently eroding your hard-earned savings. Kiyosaki suggests that this is the root cause of the growing wealth gap between the rich and the poor, given the differentiated access to investments and assets. The real estate market can potentially benefit from inflation by taking advantage of asset appreciation. However, for the average person who diligently saves their salary, the value of their savings slowly decreases over time. The game seems to be rigged, with the money supply continually inflating, resulting in the gradual loss of purchasing power of savings. So what should the average investor do? Saving diligently in dollars may seem like a futile mission in this age of counterfeit money. Robert Kiyosaki, an ardent critic of the current financial system, suggests that there are ways to protect yourself from this financial assault. He proposes a strategy centered on a timeless asset, a metal that has captivated humanity for millennia: gold. Unlike the ever-growing supply of dollars, gold has a finite supply. It cannot be printed at will by a central bank. Kiyosaki argues that this scarcity gives gold a unique resilience against inflation. Throughout history, gold has often served as a hedge against weakening currencies. Let's explore a little more about why gold was considered money some 5,000 years ago. Since ancient times, gold has been valued for its rarity, durability, and malleability. By not reacting to the elements, gold survived time, maintaining its value. In addition, its malleability allowed it to be transformed into coins and other valuables. I remember a visit to the mountains of Peru, where I saw small holes in the mountain sides. There, the Incas, many centuries ago, explored for gold veins. How did they know that gold was valuable Firstly, gold is scarce, which makes it rare and precious. It doesn't react to the elements, which means it doesn't deteriorate over time, and it's malleable, so it can be molded into useful shapes, such as coins. These attributes, scarcity, durability, and malleability, have made gold the main choice of currency since the beginning of human commercial transactions. Let's take a trip back in time to a period etched in the minds of investors, the tumultuous years between June 2005 and early 2011. The US stock market was a real roller coaster, especially during the infamous financial crisis of 2008-2009, triggered by the collapse of subprime mortgages. During that period, the S&P 500 index, an important indicator of American stocks, delivered a rather dismal return of just 9%. Now here's where things get interesting. While stocks were plummeting, gold, the shining refuge that Kiyosaki advocates so much, was excelling. During the same period, the value of gold rose significantly, proving to be an effective hedge against the volatility and uncertainty of the stock market. This resilience of gold in times of crisis reaffirms its position as a reliable asset and a hedge against inflation. In the last 6 years, gold prices have soared by an impressive 233%. This translates into a monumental 226% outperformance of the S&P 500. This historical example perfectly illustrates Robert Kiyosaki's point. When traditional investments, such as shares, suffer significant losses, gold, with its historical reputation as a safe haven asset, can offer a shield against inflation and market volatility. Throughout history, humanity has been repeatedly betrayed by unreliable currencies, from wooden tokens to digital money. Yet through it all, gold has remained constant. Kiyosaki points to 3 main attributes that have consolidated gold's value for millennia. Scarcity. Unlike the ever-increasing supply of dollars, gold is a finite resource. There is a limit to the amount of gold that can be found, which makes it inherently valuable. Impermeability. Unlike paper money, which can rot, or digital data, which can be corrupted, gold is remarkably stable. It doesn't rust or tarnish, ensuring that its value transcends generations. Malleability. Gold's softness allows it to be easily shaped into coins or bars, making it a practical medium of exchange. These qualities are why ancient civilizations, from the Incas to the Chinese, recognized the value of gold. It wasn't magic or coincidence, but a question of practicality and resilience. In a world full of dubious financial schemes, Kiyosaki argues that gold stands out as a reliable store of value, a beacon of stability in a sea of financial uncertainty. Looking at the best funded and most informed traders on the planet, we see that central banks, the most sophisticated traders, have bought more gold in the last 2 years than at any time in recent history. Not only have they reclassified gold as a prime asset, but they are also repatriating it from the New York Federal Reserve and the Bank of England. These actions indicate a significant strategic shift, possibly signaling a growing recognition of gold as a long-term financial instrument. Central banks wouldn't be accumulating gold at such a dramatic pace if they didn't see its value in the face of potential economic turmoil. Their actions are a sign that everyone, from average investors to financial giants, should reconsider their approaches to wealth preservation in this age of fake money. So how can the average investor incorporate gold into their investment strategy in this digital age? Fortunately, it's easier than ever. One popular option is the SPDR Gold Shares ETF, GLD. This exchange-traded fund offers several advantages. Ease of purchase. You can buy GLD, like any share, through your brokerage account, without the need to physically store or transport gold bars. Low fees. With an annual expense ratio of just 0.4%, GLD offers a cost-effective way to gain exposure to gold prices. Gold price tracking. GLD directly reflects gold price movements, making it a simple way to participate in the metal's upside potential. Options trading. For more advanced investors, GLD offers options trading, allowing for potentially amplified returns and risks. Robert Kiyosaki presents a compelling argument about the potential pitfalls of counterfeit money and the enduring value of gold. Whether you fully embrace his perspective or not, one thing is clear. In a world of rising inflation and financial uncertainty, including some gold in your investment portfolio may be a prudent move. After all, even central bankers seem to be taking a shine